Welcome to the March 26, 2018 Advance Report for McGowanGroup Asset Management clients and NetWorthRadio.com listeners. Special focus on the Fed this week. The short interest rates were raised to 1.5. We're going to show you that chart in just a second. This is the Fed forecast. This weekend's program at NetWorthRadio.com is actually featuring Dr. W. Michael Cox, the former chief economist of the Dallas Fed and a longtime friend of Net Worth Radio. So don't miss that extended interview for perspective on inflation, equity, and Federal Reserve activity, including the new chairman, Jerome Powell. They had to raise their GDP forecast. The Fed's been too pessimistic. Maybe they didn't study the Reagan years with deregulation and tax reform, but they did raise growth to 2.7. They're still pessimistic for the longer run, saying growth is going to fall below 2. Not quite sure why, because the unemployment rate is projected to go to record lows over the next 3 years, and that's good news. Inflation staying at about 2% according to the Fed. And look at this. Fed funds rate, we're about to show you the graph. They say they're going to take it to 2 and then to 3.4. I'm going to show you something interesting about that 3.4 here on the next chart, the next two charts. So this is the upper bound of the overnight bank lending rate dictated by the Fed, even though we live in a free market, supposedly. Okay, 1 3/4, the base rate is 1.5. And what you see here is this relentless increase since the end of 2015, stair-stepping that rate up by about 1.5%. What's the impact on the other treasury rates and the fixed income strategy? Inflation strategy and equity strategy about to follow, and we'll show you some interesting things about the current state of the equity markets as well. This is a fixed income strategy clue. Here's your T-bill rate following the Federal Reserve. The midpoint between the overnight bank lending rate, T-bills follow it because of bank arbitrage. Now we go to the 30-year Treasury. Look at this. It's actually down from the post-election spike to 3.2. It's about 3.1% here at the end of the week. And I'll tell you what I think that means in fixed income strategy. Anything paying 6% or more at some point has good capital gain potential as long as that fixed income strategy is trading below par. We'll cover more details in this weekend's long play program on fixed income. We're going to shift gears now to equity. Dow Jones Industrial Average started the week dancing above 25,000, got slammed on Thursday, concurrent with the tariff trade war discussion, and we see right here that 700-point decline. So the Dow spent some time above 25,000 and below 24,000 this week. The volatility index correspondingly rising substantially, the forward risk because of that 1 week drop of about 1,000 points. What is cheap? What you can see here is a long-term bear market cycle that may in fact be complete based upon this long-term chart. This is the pipeline index. Now, pipelines and liquid natural gas shipping are part of this index. Here's oil at 100, here's oil at 27. Right now, we've gone from 27 to 65 this week. Now, think about that. Oil, $1 more, and it's going to be the highest since the collapse of 2014. Yet this index is behaving the same way it did when oil was 30 or 40 a barrel. What gives? And the cash flows are increasing for the pipelines. This could be a great inflation-friendly strategy that pays a lot of cash flow, and we'll go more in depth with an upcoming interview with one of the managers in this space. Where does this bottom? I think this is the long-term trend right here, and we'll have more updates for you there. This could be one of the best opportunities in an asset class that's already had a bear instead of dancing near its highs. I'm Spencer McGowan, President, McGowanGroup Asset Management. Thank you for joining us, and you can find more at NetWorthRadio.com. Better yet, fill out the client questionnaire, get the process started to come down to the Crescent, meet the team that cares, and update your plan. Thank you for tuning in. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.